Hi class, I'm going to finish up problem 18, problem chapter 2, problem 1B. The video cut off on me before I got finished with it, so I want to go ahead and start where we left off. So if you'll bear with me just a minute, I'm going to share my screen again. You should be seeing problem 2-01B, and we have already completed all the transactions down to transaction N. So we're going to start with transaction N. And transaction N, it says we paid $300 on a note payable. Our cash would be decreased by $300. And our notes payable would also be decreased by $300. To decrease cash, which is an asset, you would credit. To decrease notes payable, which is a liability, you would debit. And I'm going to check my work. It looks like we're okay there. So we're going to start back with O. For O, we paid gas, oil, and repairs on the automobile for April for $550. This is transaction O. Our cash is decreasing. To decrease an asset, you would credit. And then our repairs expense for the automobile would also be increasing on the debit side. Expenses go up on the debit side. And the amount of that expense was $550. All right, so we've analyzed all of our transactions through the T accounts. What we should do next is we should determine the balances of each one of the T accounts. So I'm going to work with you on sharing how to balance accounts. You'll remember that in the previous video, we stated that the balance side would always be on the increase side of the account. Notice in Cengage, they've labeled it balance. For the cash account, it's going to be on the debit side or the left side because that is the increase side of the account. Now, here's how we're going to balance our cash account. And so you might want to take some notes here. So if you got a piece of paper handy, jot down these notes. For cash, we're going to add up the left side, which is the debit side. That's the increase side. And so what you're going to do is you're going to add up the left side, which is the debit side. That's the increase side of the accounts. So I'm going to put that in my calculator. So 18,000 plus 12,000. The total debits to my cash account is $30,000. So cash has a debit balance of $30,000. Excuse me, cash has two debits for $30,000. I'm simply going to total them up first. Then what you need to do is total up all your minuses. The total of the minuses is going to be subtracted from the total of the pluses to get the remaining balance. So I added my debits first. I got a total debit amount of $30,000. Write that down. I'm going to add up my credit side to the cash account. and my total of my credits is 15,525. I want you to write that down, and I want you to listen carefully. The total of my debits was 30,000. That's my increase side, so that's my plus side. So I've got 30,000 on this side. When I added up all of my credits, I got a total credit amount of 15,525. My debits to my cash account are increases. My credits are decreases. So I'm going to subtract my credits from my total debits to get the balance in the cash account. So 30,000 was my total debits. I'm going to subtract out my credits of 15,525, and that will leave you with a balance in the cash account of 14,475. And I'm going to check my work just to make sure that I added everything and subtracted everything correctly. And this is the correct balance here. Now let me talk to you about it again. Add your plus side up first, total them up. Add your minus sign up, minus signs up, total them up. Subtract your minuses from your pluses, and what's remaining should be a plus. The plus would go on the debit side of the cash account because that's its normal balance side. The side of the increase is always the balance side. I added my debits, I subtracted my credits, and that gave me this balance. Now you might remember from chapter 1 that we put everything in the cash column, in one column. We added and we subtracted, and at the end of the period, we came up with the balance amount. We really did the same thing here. If you wanted to, you could have taken each one of these separately. Take this and add it, subtract this, add this, subtract, 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 all the way down, and it'll leave you with that balance for the cash account. Since accounts receivable doesn't have a credit to it, this is the balance in the accounts receivable account. Accounts receivable is an asset account. It should always have a debit balance. The balance should be on the increase side. So technically they should have written balance here at 15,650. Supplies, prepaid insurance, and automobiles, all of those are assets. Because there were no credits to any one of these accounts, the balance that is in there is the balance of that account at the end of the time period. Equipment's the same way. It's an asset account. The balance of equipment right now is $6,500. Notice that accounts payable had several things going on with accounts payable. You need to remember that accounts payable is a liability. Liabilities increase on the credit side because they're on the opposite side of the equals mark from assets. We add the two credits together, 6,500 plus 2,500, and then you'll deduct the minus to that accounts payable, which was 1,800. And what you have remaining is 7,200. That is the balance that should be on, notice it's on the credit side, because that's the side that liabilities increase on. Be sure and check your work here because you've got to have your balances correct before you move on. So my two credits to accounts payable, which is a liability, the credit side is the increase side. I subtract my debit from it, and what's left over is 7,200. So what we're really saying is that we owe at the end of the accounting period, at the end of April, we owe $7,200 to our suppliers. For notes payable, it too is a liability. The credit side is the increase side. So I would put in 17,000. That's my plus side for notes payable. I'm going to subtract 300 from that, and what's left over, or what is remaining, is what I still owe in notes payable. Remember, we bought that car and they put a down payment toward it. And so well, actually the balance was 17,000. Then we paid some toward the car. What we have still remaining that we owe is 16,700. And I would check my work after each one of those, just to make sure that the balances are correct. Your balances have to be correct before you can move to the next step. Professional fees, or capital was the next one. Capital just had one thing that was added to it. This is the balance of the capital account. For professional fees, we had 2 credits. Revenue is added to on the credit side. So we're going to add 12,000 and 15,650 together, and that's going to give us the balance in our professional fees at the end of the month. It's 27,650. And I would check my work just to make sure that my balances are correct before you move on. Rent expense, salary expense, blueprint expense, automobile expense, they only had one thing that happened to them. So these amounts are the balances in those expense accounts. Now look at miscellaneous expense. It had 2 things that happened to it. They happened on the debit side, which is the add side. So I would combine both of these together to get the balance of my miscellaneous expense at the end of the month. My miscellaneous expenses totaled $575,000. Once you've balanced each one of your T accounts, the next step that they asked you to do was to create a trial balance. Now, class, I want you to listen to me for a minute. Your T accounts are just tools that help you to analyze transactions. They are not formal accounting documents. So I don't know why Cengage is asking you to prepare a trial balance. A trial balance would be prepared from your ledger accounts, which we have not discussed yet. But to finish this problem, because you'll need to finish it on Cengage, all they want you to do to put on this trial balance is list all of the accounts that you worked with and the ending balances only. So the trial balance is a list of your accounts and their ending balances. The trial balance is also a tool. It's not a formal accounting document, but it's a tool to make sure that we have recorded everything properly and it's in balance at the end of the accounting period. So unfortunately, I probably would have stopped here as an instructor, because you need to know how to analyze transactions through the T accounts and balance your T accounts. But they took it a step further, which you're not really ready to do yet. This comes later. You do have to know how to do it eventually, but it comes later after you've balanced your ledger accounts that we haven't talked about. But I'm going to prepare it for you just to show you what they want you to answer. Start with your cash account. Go back to your cash T account. Notice the balance is on the left side. That's the debit side. and it's $14,475. You're just copying the balance. Make sure you put it on the debit side and make sure it's for the amount of the balance to the cash account, which was $14,475. Then you'll move to accounts receivable. Accounts receivable would come next. How did I know that? Just look at the T accounts. The next one that shows up is accounts receivable. Accounts receivable is an asset. It should have a debit balance. The balance is $15,650. You're just copying. So the next account that shows up is supplies. Supplies has a debit balance because it's an asset account. It increases on the debit side and its balance amount is $1450. So supplies would go next at $1450. The next account in your list is prepaid insurance. Its balance is a debit balance for $2,400. Prepaid insurance is an asset. It has a debit balance of $2,400 because assets increase on the debit side. Automobiles has a balance of $19,500. You're just copying from the information above. Automobile is an asset account. It cost us $19,500. And so we just copied it to the unadjusted trial balance. Equipment is $6,500. The next account is accounts payable. Be careful, accounts payable is a liability. Liabilities have credit balances because that's the side they increase on. So I'm going to copy $7,200 to accounts payable. You have to put it on the credit side because liabilities have credit balances. My next liability account is notes payable. Its balance was $16,700. It too is a liability, so it should have a credit balance. The next account is capital. It only has a credit to it. This is the balance. The capital account has a balance of $18,000 right now. And that is a credit balance. The professional fees has a credit balance. We're going to pick up $27,650. Let me double check that amount. It's $27,650. The next account underneath professional fees is rent expense. Notice rent expense is over on the debit side. So rent expense of $31.50 goes on the debit side. Make sure you put it on the debit side. That's its balance. The salary expense has a debit balance of $2,800. You're just copying the ending balances down here. And it's expense, so it's got to have a debit balance. The blueprint expense has a debit balance of $2,500. Then the next account was automobile expense. It was $550. And it was a debit balance because expenses have debit balances. And then there was miscellaneous expense. It's debited for $575. So the only thing we did is we copied the names of the accounts down and their balances. The next step of the unadjusted trial balance is to add all the debits together to get the total debit balance, the total debit balance for this month. So we're going to start with cash at $14,475. I'm going to add to it $15,650. I'm going to add to it $1,450, $2,400, $19,500, $6,500, $3,150, $2,800, $2,500, $550, and $575. Hopefully I've added all these up correctly. We're getting ready to find out. $74,750 is the total of my debits. I just added all these together to put them down here. Oh, I didn't add right. So let me see what I didn't add right. Now, I don't have any ideas. So you just got to start over till you get it right. Well, I can tell that I've put in all the right accounts. So let me try the smaller side over here. We're going to look at the credit balances of $7,200 plus $16,700 plus $18,000 plus $27,650. Okay, the credit side is $69,550. I'm going to check my work, see if that total is added right. It is. So this total has to be equal because my debits and my credits must equal. So this total must be $69,550. Okay. So what I'm saying to you is I added wrong a while ago. That's why it gave me that X mark. If you re-add this column, it should be $69,550. If you add this column, it's $69,550. These two must balance. The total debits must equal the total credits. The only thing this does is a tool that shows you that you've entered information in correctly from your T accounts. It does not prove that the T accounts are all right. It just means the math that you put up there is correct down here. If you left out a transaction altogether, it would be completely missing. So therefore, you could have balancing transactions down here, but they may not be right. Or you could have flip-flopped a credit balance, put it in on the debit side and put the credit balance for the debit side or whatever. You can flip-flop these around and it still might balance out down here. So technically, when you total up your unadjusted trial balance, it does not mean that everything's been entered correctly. It's just showing you that this is a check figure and it looks like everything's all right. I hope I've explained that well to you. Read about it in your chapter. It'll help you. If you always read your chapter, it'll help some. Now, there's another part to this that students always ask me about, and notice they're asking you to determine the net income or the net loss for April. The way that you find net income or net loss is you've got to add up all of your revenue accounts, which you had a revenue account here at $27,650. Then add up the total of your expenses and subtract your total expenses from your revenue. So we'll try to do this. I really wish I had my trusty board where I could write on it with you. But I'm just going to share. We're going to do the best we can. Put down the total of your revenue, which was your professional fees, $27,650. $27,650. All right. Now you got to subtract from it each one of the expenses. So we had a rent expense for $31.50. We've got to subtract out $2,800 for our salary expense. We've got to subtract out $2,500 for your blueprint expense. We've got to subtract out $550 for your automobile expense, and $575 would be subtracted too. Hopefully I've added and subtracted everything right. We're getting ready to find out. The amount is going to be $18,075, and it will be net income because my net income, my revenue is larger than the total of my expenses. So let me check my work, and my math is correct. Again, what you would do is you prepare an income statement. You remember from chapter 1 when you were preparing an income statement, you wrote down your revenue, totaled it up, then you wrote down all your expenses, totaled them up, then subtract the total of your expenses from your revenue, and that's how we get net income. So that's all I'm going to talk to you about today. I feel like that's enough. What you really need to concentrate on is analyzing transactions through the T accounts. Make sure you understand how to analyze transactions through T accounts and how to balance these accounts. That's the most important thing you can learn from this particular problem. So we'll stop sharing here, and I'm going to stop the recording.